Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is 9 a.m. in the morning, New York, April 15th, 2020. Stay tax day. Looks like not this year. Anyways, for economic reports today, before the bell, we had core retail sales and retail sales for the U.S. markets. That was our Red Star News event for the day. Minus 8.7%, so that was a miss. I think it's the worst reading since 2009. Core retail sales was actually a beat, down 4.5%. For news events following up to the open, we're going to have the Canadian dollar, Bank of Canada rate statement, the monetary policy report, the overnight rate coming in at 10 o'clock in an hour from now. Then we're going to have the Bank of Canada press conference following up at 10:30. This is equivalent to their FOMC meeting minutes, and the Canadian dollar has had a huge move here. Tonight, we're going to have the unemployment rate and employment change out of the Australian dollar. And then tomorrow, guys, the big event, of course, again, is unemployment claims, where they're expecting another 5 million jobs lost, which is, it's getting absurd. If we can just lose 5 million jobs a week, that would put us at 20 million jobs lost in 4 weeks. If we lose 5 million jobs tomorrow, pretty incredible. We're also going to have Chinese GDP. Chinese GDP coming out tomorrow. Last year they grew 6%. Or I'm not sure. That's actually might be last quarter. They're expected to be at minus 6.2%, so that's a 12% change in GDP, which is an astronomically large number. So those are our larger news events that we're going to have here later this week. We have a trend change in almost all of the markets that we watch here, and I want to talk about what's that all coming from. So first off, we will start off with the VIX here today. I have the VXK20 contract in here. This is the May 2020 contract. So VXK20 for today. Now, if you go to the 10-year monthly chart, I'm drawing from the continuous contract low. So this is going to be confusing for those of you guys who are new to this, but if you type in VX, okay, VX is the continuous contract. The continuous contract is every single month of every single year, all kind of mashed together. Now, the continuous contract has technically broke at 61.8, but the current contract has not. What we're going to do is we're going to take the low of the continuous contract, which is 990, okay, and then you're going to type in VXK20. And you can draw a fib here from the bottom of your screen. It's actually 960. I have it, it's 990. So you're going to draw a fib from 960 to the most recent high here in the VXK20 contract. And you can see we have held this 61.8. So this is technically on the VXK. This is still a valid setup. Now, what is going on today is there is a VIX futures roll. There's a VIX futures roll, and when the futures roll in the VIX, basically everybody is into the new contract, and there's no protection on in the previous contract. The previous contract is the April contract, and as traders get out of the April contract, they need to get into the May contract. So they sell the April to close their position, and then they start buying the May contract. So that might, be a whole new thing or a whole new concept for some of you traders. But that's why we have in the continuous contract this gap here. But this is very important when we get these rolls. It's very important. You can see the last roll we had was on the 18th of March. Well, that's pretty close to where the bottom of the market is. And before that, the roll before that was on the 18th of January. So let's just go over the S&P and look at a daily chart of those dates. So what did we say? We said the 18th. I'm going to get rid of these studies here. Where's that vertical line? There you are. So we had the 18th of February. Okay, what is that? A day away from our all-time high. And then we had the 18th right here of March. Okay, and then we made one new low, and then we've been rallying ever since. And now we're rolling here because we roll on the third Wednesday of the month. And now we've rolled, and you can just see that these rolls happen at very important points in the market. Okay, very important points in the market. So now we have our next roll right here. So let's just take a look. We have basically our all-time high, pretty close to our low, and once again we're at a halfway back. So these are cycles that appear in the market, which are totally related to the VIX, and it being an instrument of hedging. So it's pretty interesting to just see us begin selling off as soon as the VIX rolls, and there is absolutely a correlation here. Now, going into yesterday for the S&P 500, we were looking at this extension. You know, we're bullish above, bearish below. Line in the sand is this extension drawn from the high of the 26 to high. Now, our upside target was 28, 50, 51 area. We came up into 28. It's a high right there. 28.46 is in the close, about 4 or 5 points away. And then in the overnight session, we began a series of shorts. There was not only trend changes in the ES, there was trend changes in all of the currencies last night. Total and complete trend changes. We traded our first 50% retracement short. We blew out of targets. We began trading extensions. We've completed those profit targets. Going into the morning, I'm going to be looking at the same anchor new low, and guess what that 50% is going to line up with? It's going to line up with our daily halfway back short. Okay? What's our daily halfway back short? It's the high of 2020 to the low of 2020. And that level is a 27.8575. 27.8575. So this is going to be a pretty heavy resistance level here going into the morning, this entire area. Okay, this is really the first pullback zone here. Now, when the trend is really going to begin selling off is we are still inside of this extension. The daily long trend will continue to exist as long as we hold above the 61.8 of the extension that began off the high of the 26th of March. So what does that mean? That means we are technically bullish on the daily above 2718s, 2720s. Now, at this point in time, I think there's a chance that it breaks with the VIX roll. We're going to watch these halfway backs here and look for a continuation. But once we break the 2715, that is it for the daily long sequence that we have been rallying out of since basically the 23rd of March. That would be it. We would begin this reversal that everybody has been looking for. Everybody's can't believe their eyes that this market is rallying. Well, that rally could be very close to an end if we break below 27.15s in the S&P 500 futures market. Moving on to the Dow. The Dow was the weakest market yesterday, out of the ones we watched, at least for the indexes. The full 50% retracement in the Dow exists from the high of 2020 to the low. That level is 23,812, and you can see we've been rejected. We're really just unable to get above those highs. We have the same extension here in the Dow as we did in the ES, and it is from the high of the 26th of March to high. We are sitting right on that level as we go into the open. We are technically bullish above that level for the daily chart. Now, just like the ES, we had these halfway back shorts in the Dow that ran through profit targets into extensions. Going into the morning, we're going to have that same anchor new low. The resistance level is 23,459. 23,459. There is the 50% retracement for the Dow. Moving on to the Nasdaq. The Nasdaq is the strongest market. It is the only market that has broken its halfway back short for the year. But really, without a break in the other indexes, we can't expect this to continue to rally. Now, what the Nasdaq had going into yesterday was an extension. Once again, it was from the 26th of March to high. We blew out of those targets in the morning yesterday. From there, we went extension to extension. We blew out of those targets. Then we went extension to extension. We blew out of those targets, and then we went extension to extension, and that extension finally failed. But an incredible example of a fib sequence. That extension failed, and we began selling off in halfway back shorts. Now, the Nasdaq being the strongest market out of all of our indexes, I would only look for the full 50% retracement short from the prior day high to low, and that is an 86.06 half for an entry. 86.06 half for an entry. Okay, and we are going to be looking for the Nasdaq to begin participating in short sequences all the way down. Now, as far as higher time frame level supports we can move into in the Nasdaq, I'm still going to watch that 326 high to high. Okay, still want to watch that opposing long setup. That is going to be an 83.0175. The 50% retracement lines up with the prior highs here, here, and here, and here. So this is an important support level that I'm watching just for a counter trend trade to the long side here in the Nasdaq. 83.0175. Moving on to oil, which continues to go to zero. Unfortunately, I'm not driving anywhere, and neither is anybody else, so I'm not able to take advantage of these cheap oil prices, which is exactly why they're cheap. The full halfway back from Thursday's high to what was the Sunday night low was front run at a 38.2. Very aggressive selling after the quote-unquote oil deal was done. They had cut production by what, 20 million barrels, something like that. Well, guess what? Doesn't matter. We go through targets. Yesterday, we go into extensions. We complete those extensions. We have a same anchor new low here, which gives us our resistance level at 2062. 2062 is that 50% retracement. Let me actually double check. I think we have oil inventory report today, because usually we have it on Wednesday, but I don't remember reading it. So let me take a look here. Wednesday. Crude oil inventories, yes, 10:30, right with the Bank of Canada press conference. Okay, so crude oil inventory is at 10:30. Just be aware of that. And then another market that has had, a trend break at least here, and all of the currencies really flipped a switch. We had a very aggressive dollar weakness trade going into yesterday, and overnight that has turned into a dollar strength trade. And one of the things we've seen is when the dollar's actually been getting strong, that's when the indexes have their weakest moves. That's when the indexes have been selling off. There's a correlation there. Nothing that I would trade off of, but it's just something that we would notice. Now, the USD JPY was inside of short sequence. Okay, and we had this halfway back. It was really sloppy. Okay, and then we blew out of those profit targets. We began extensions once we blew out of those targets, and then those targets blew out, and then going into yesterday we had a new extension. That extension is technically broke. So this whole sequence down is over. The only thing potentially above us is the full 50% retracement short, and that's a move to 108.14. We have double bottomed here at this it's a 106.95, 107 level. That's where the support is. But one thing we're going to look for is a counter trend rally into 108.14, because now that we've broken this downtrend sequence, I have no resistance until we get to that full 50% retracement short at 108.14. So I'm going to set an alert at that 108.14 and begin looking for it and identifying long entries until we get up into that point. So coming out of these lows, you had your first 50% retracement long. This was super sloppy. And then you had that low to high trade. Okay, we've just completed profit targets, and so this would be your next move. Just to swing low from 6 a.m. this morning to the most recent high. It's a 107.47, 50% retracement. Moving on to the Aussie dollar. Very interesting here. So the Aussie dollar was in a long setup yesterday. Remember how strong the Aussie dollar has been? The Aussie dollar literally coming out of last Monday, the 5th of April, we've rallied 400 plus pips in the Aussie dollar. It's been incredibly strong. We've snapped that pattern overnight. And what we want to pay attention to, it's when these trend breaks occur, it's very important to really watch the higher time frame sequence. So we had an extension from what was the high, 62.12 the high, traded to target, same anchor, new high, just totally broke this morning. What's interesting is, where did it break from? Where was our high? Our current high, we did stick this big 61. We did stick this big 61. So what I'm looking for right now in the AUD USD is really first the next traditional. That is just from the beginning of that move up, which is the 3rd of April to high. That 50% retracement is at 62.10. Well, that lines up with the previous highs we broke out of. So I'm anticipating our support to be around this zone here. Okay, this is where I'm anticipating the support to come in. In the meantime, there's a couple of different variations of retracements we can look at to the short side, and the most aggressive being the extension here, and it's would just be from 64.04 to low, and that brings us back up into our last hourly leg start right here. So it'd be a 63.44 would be the 50% retracement. 63.44 is the resistance level I am looking at. Also remember, AUD does have a news event tonight. We have the unemployment rate and employment change tonight at 9:30 New York for the Aussie dollar. So that is going to be, there's going to be a setup around 9:30 tonight for the Aussie dollar that you're going to want to pay attention to. Euro also turned into a dollar strength trade overnight. Now we were holding long setups, and we have technically failed those setups. Coming out of the initial low of the 6th of April, we had this halfway back long to target, halfway back long, and we came just shy of our targets and then broke that. What we broke it out of was this bigger traditional short. Now we have fallen out of bed, broken the sequence, and the trend is flipped. What I'm going to look for here is a full 50% retracement short. That would be an ideal entry. It is a 109.22. There is a more aggressive extension sequence in here. But I'm going to look at the full 50% retracement short at 109.22. And then gold, I'm looking for it to confirm its support. Now, if we look at what did we have coming out of the beginning of the rally, which goes to Thursday, there was a traditional here, and that traditional turned into an extension. That is the current low right now, but I want to confirm this support by breaking above 1757. If we break above 1757, I will begin looking for longs. If we hold below this yellow line, I expect us to continue selling off down into 1682. So right now, I'm just watching what gold is doing. If we can rally, I'm going to look for pullbacks. If we can't, I'm expecting to move down to 1682. And silver is going to arb right along with that. There is this traditional that was bought last Wednesday. The target was 1630. That was basically the high of Tuesday. Technically, our next support level should be here. We have dipped into this 61.8. We have dipped into the 61.8. We will reconfirm this support if we get above 1587s in gold rallies as well. It is a little sloppy here. Right now we are bearish below 1587. Bearish below 1587 in silver on the hourly time frame. GBP USD. The GBP USD had an extension that goes back a couple weeks. It's from the high of the 25th of March to high. We completed those targets at the end of the day yesterday. So technically, same anchor new high would be the sequence to watch. And it is a 123.89 support level. It is a 123.89 support level. That is the 38% retracement. The 50 is all the way down at 123.09. I'm going to mark up both of those levels. And then I do want to just see what this traditional would be. Got that traditional lineup right there. There's a counter trend short sequence in here as well that you can look at. It's just extension short. So there's a counter trend short sequence in a higher time frame support. The USD CAD has freaking ripped out here. Okay, and I want to go back to the daily. This is potentially the beginning of a major move. We're going to go to a daily chart. Starting off the 2020 year, there was a 50% retracement long that traded. Okay, we went sideways for a week and a half. We blew out of targets. We began extensions, highs to highs. Once, twice. This is technically the third time off of 38.2 before that massive gap up. Same anchor new high. Seems like this is a support that broke the trend. We were just like all of the currencies. This is why I said, you know, the currencies have really had a complete and total reversal here more than anything. You know, if you had any setups that were valid last night, they were all breaking because you have a complete trend reversal. Look at this. Down, 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 boom. Inside bar. Look at this, the range of this bar. It's 244 pips. That's an absolutely massive move, and it's the biggest move in over a month here for the USD CAD. So what can we expect? Typically when you have these large of moves out of support levels, they're the beginning of something even bigger. What I did is I went down to the smallest time frame, so like a 5-minute chart, to identify what the extension sequence is. And the last higher time frame extension that I saw that traded to target was a 139.77 a high. This had traded once here, it had traded twice, and you can see our current highs that negative 61. I'm looking for the same anchor new high here for the USD CAD at the 140.65 to the 140.48. If that doesn't hold, we're coming full halfway back long. Okay, and that's the more conservative draw. So you always have the intraday sequences and then the more conservative draws. But that's what I have here for this morning's trade plan. I know it's a lot to go over. There's just a lot of things more than typically happening here. So let me just back out. I think the extensions in the ES here are going to be really important setups first thing in the morning, as well as these currency moves are the beginnings of some major trends potentially. Specifically watching the USD CAD. The USD CAD does have that Bank of Canada rate statement, so be careful taking a position carrying it through that rate statement. It could be extremely volatile. And then the Aussie dollar has that news event later tonight. So just be aware of all of that, guys. There's a lot of news, a lot of trend changes here today. Pick a couple pairs, trade the conservative setups, and everybody have a wonderful day. If you enjoyed this content, please give this video a thumbs up. Feel free to share it with anybody you might think will find it useful. I have a course on futures trading in the link below if you are brand new to this stuff and this fascinates you as much as it does me. And that's all I got. 25 minutes in. Take care, guys.